The North Korean exchange rate is crazy these days. Why? Recently, foreign currency exchange rates in North Korea's black market have gone wild. The exchange rate, which began to rise gradually in 2024, is currently breaking all-time highs, surpassing the 70,000 won per dollar and 8,800 won per yuan marks as of 2026. It has skyrocketed by nearly 80% in the last few months alone. Let us examine the causes and future outlook. Over the past decade, the exchange rate in North Korea's unofficial market, Jangmadang, has undergone dramatic three-stage changes: a period of stability, a period of the COVID-19 shock, and the recent unprecedented surge. Unlike the official exchange rate around 151 per dollar, the value of the North Korean won KPW reveals the true economic reality in the market exchange rate, where residents, donju, new capitalists, and trading companies conduct transactions. Let us take a detailed look at the exchange rate trends over the past decade, the key causes of fluctuations, and the latest developments. Let's examine the three major trends in exchange rate fluctuations over the past decade. North Korea's exchange rate is extremely sensitive to the supply versus demand of foreign currency, distrust in government policies, and external shocks. The dollar-yuan exchange rate functions as a stable store of value dollarization. The period from 2016 to 2019 was characterized by a phenomenon of miraculous stability, despite sanctions against North Korea. Even though official export routes were blocked by strong UN sanctions such as Resolution 2397, the market exchange rate during this period remained surprisingly stagnant at around 8,000 won. This was due to widespread dollarization following the failure of the 2009 currency reform. Residents distrusted the North Korean won and used only dollars and yuan for asset accumulation and high-value transactions. Paradoxically, as the circulation of the domestic currency decreased, the value of the won stabilized. A key factor is the significant institutionalization of foreign currency circulation to some extent following Kim Jong-un's rise to power, as the Jangmadang marketplaces were tacitly accepted and incorporated into the regime. North Korean residents still engage in economic activities and wealth accumulation using US dollars, euros, British pounds, Japanese yen, and Chinese yuan, which are primarily channeled in through smuggling. Supply of foreign currency through smuggling. Although official trade was blocked, foreign currency steadily flowed into the Jangmadang through large-scale smuggling across border regions, indirect exports of minerals, and remittances from overseas dispatched workers. The period from 2020 to 2023 witnessed the paradox of COVID-19 border closures and a strong sharp decline in foreign currency. As COVID-19 spread, North Korean authorities completely sealed off the borders. This resulted in the unusual phenomenon where the exchange rate plummeted to the 4,000–5,000 won range, effectively half its previous level. Demand for foreign currency vanished due to the suspension of imports. With the borders closed and goods no longer sourcing from China, traders and wealthy merchants stopped seeking the yuan and dollars needed for payments. The demand for foreign currency collapsed first. Due to strong government controls, reverse dollarization occurred. North Korean authorities strictly banned and cracked down on the use of foreign currency in markets to reclaim economic dominance centered on Pyongyang. As there were no places to spend foreign currency, its value in the market temporarily plummeted. A notable feature is that the yuan fell even more sharply than the dollar. Following the border closure in January 2020, the value of foreign currency declined, significantly reducing the frequency with which residents used it in their daily lives. By June 2021, the 1 yuan exchange rate had plunged below 500 won. At that time, not only was it difficult to find imported goods in the market, but since using the yuan was disadvantageous, Many people decided to hold on to their yuan until the exchange rate rose rather than use it to purchase items. From 2024 to 2026, the value of the Korean won is plummeting due to an unprecedented surge in exchange rates. The exchange rate, which began to rise gradually in 2024, has surpassed the 70,000 won per dollar and 8,800 won per yuan mark as of 2026, breaking all-time highs. It has skyrocketed by nearly 80% in the last few months alone. This is due to large-scale issuance of yuan and inflation driven by wage hikes. To stimulate domestic demand and appease public sentiment, the North Korean authorities drastically increased nominal wages to levels tens of times higher than in the past, while simultaneously printing massive amounts of North Korean won currency. The value of the currency collapsed after an excessive amount of yuan was released into the market, following a nearly 20-fold increase in the monthly wages of factory workers, 1,800-2,300 won, in October 2023. The resumption of trade between North Korea and China and the competition to attract investment are also contributing factors. As the border opened and trade with China became fully active, the demand for foreign currency for settlement payments exploded. In particular, trade organizations and investors seeking to attract Chinese capital are preemptively hoarding dollars and yuan, fueling the rise in exchange rates. Demand for foreign currency has surged significantly as individual trading activities by regional trading. Companies have increased in the wake of North Korea's Regional Development 2010 policy. It is reported that demand for the yuan in regional areas far exceeds that of the dollar, as construction materials and machinery needed for factories are imported from China. Consequently, the yuan exchange rate has shown a steeper upward trend than the dollar exchange rate. North Korea drastically increased nominal wages by an average of approximately 20 times in 2024, and printed large quantities of domestic currency to support large-scale state projects, such as the Regional Development 2010 policy. In particular, the surge in liquidity, not only in physical currency but also in high-denomination 50,000 won banknotes, and digital won card account entry fueled the depreciation of the won. The situation was exacerbated by a policy contradiction. Despite the authorities seeing an improvement in their foreign exchange balance due to the economic boom caused by the war in Ukraine, they shifted the burden of procuring foreign currency for state projects onto local governments and the private sector. Latest trends and future outlook. Currently, North Korea is facing a serious situation where the skyrocketing exchange rate is directly leading to hyperinflation in the markets. The prices of imported fuels, gasoline and diesel, have surged by nearly 30% in just a few weeks, and grain prices, rice and corn, are also hitting all-time highs. With confidence in the domestic currency, which was mass issued by the authorities, completely collapsing, residents are once again staking their survival on securing stable assets such as U.S. dollars and Chinese yuan. Future outlook. There is a possibility of increased short-term volatility, and further price increases the demand for foreign currency settlements due to expanded North Korea-China economic cooperation will continue to rise. On the other hand, the pressure for further downward pressure on the value of the North Korean won remains very high due to the combination of international oil price instability and supply chain bottlenecks. As the authorities intensify their intervention, the black market is responding by turning underground. If the cost of living becomes unaffordable due to the skyrocketing exchange rate, it is highly likely that the North Korean authorities will once again forcibly impose maximum prices on market transactions or resort to cracking down on foreign currency. However, since this is not a fundamental solution, it is expected to fail to prevent the outflow of foreign currency from the official sector and only lead to the side effect of further increasing transaction rates in the unofficial black market, black dollar market. The key variable is whether the North Korean authorities shift their policy toward allowing private foreign currency holdings or whether they strengthen controls while reinforcing the foundation of the real economy. Current trends lean toward the latter, but the effectiveness is limited, and exchange rate stabilization will be difficult without resolving the complex structural crisis. Instability is highly likely to persist in the short term within 2026. While expansion of trade with China and Russia could alleviate the situation through increased supply, it will face additional upward pressure if demand rises in anticipation of hoarding or inflationary expectations. If the government cracks down on currency circulation through hardline controls, it is highly likely to have a counterproductive effect. In the medium to long term, structural upward pressure will prevail. The scarcity of foreign currency remains unresolved due to continued sanctions and the closed economy environment. Marketization relying on informal markets, Jangmadang intensifies, and dollarization becomes entrenched. Even in a positive scenario, there is still a possibility of stabilization through the resumption of large-scale trade or the easing of sanctions. In a negative scenario, there is also a risk of hyperinflation occurring due to external shocks, such as policy failures or war tensions. Thank you.